Hey friends, the DeFi Doctor here. I'm the head of education at Decentralized Masters. Today, we're talking about what's driving crypto markets. April 2025 isn't just another month, it's a turning point. Trade wars, trillion-dollar debt bombs, and a crypto market teetering between collapse and revolution. Let's dissect the chaos, decode the catalysts, and map your path to profit. This isn't a drill, it's a survival guide. Number 1, macro warfare. Trump's tariffs and the Fed's impossible choice. On April 15th, Trump detonated a 245% tariff bomb on China, targeting everything from iPhones to the rare earth metals powering EVs. Overnight, Apple halted production, Tesla delayed Cybertrucks, and Walmart warned of 18% price hikes. For families, it's a $1,300 annual hit, equivalent to a 5% income tax spike. China retaliated by weaponizing rare earth exports, and the IMF now warns of a 1% global GDP contraction. But here's the twist. This isn't just a trade war. It's a Fed power play. By tanking equities and pumping bonds, Trump's forcing Powell's hand to slash rates to ease the pain of refinancing America's $9.2 trillion debt time bomb. The Fed's May 6th meeting is a massive dilemma. Hold rates and risk a debt-driven recession, or cut and let inflation roar back. Polymarket odds give a 56% chance of no cut, but Trump's tariffs are a sledgehammer to Powell's resolve. Either way, crypto wins. Lower rates means a weaker dollar. Bitcoin's rocket fuel. Remember 2020? When yields collapsed, BTC rallied 300% in 6 months. History's rhyming hard. Bitcoin's rebound from 76,000 to 87,000 is just an opening act. Now let's discuss institutional domination. Banks, Bitcoin ETFs, and the $200 billion flood. The Genius Act just tore down Wall Street's last barriers. Banks can now custody crypto. The SEC dropped cases against Coinbase and Kraken, and BlackRock's Bitcoin ETF hit $50 billion AUM, gobbling 20% of all mined BTC since January. Daily inflows, $1.2 billion, double the pace of gold ETFs. Bank of America is rolling out an FDIC-insured stablecoin tied to 47 million retail accounts, while Citadel Securities deployed $200 million daily to dominate crypto order books. But the real story is states going rogue. Texas allocated 1% of its $35 billion rainy day fund to Bitcoin, calling it geopolitical armor. Wyoming launched a coal-backed stablecoin, and New Hampshire tokenized $500 million in bonds on Avalanche, slashing costs by 60%. Globally, Norway's sovereign fund boosted BTC holdings by 150%, and the Czech Republic added crypto to reserves. The message? Nations won't be the last ones holding fiat confetti. And tokenization? It's the silent tsunami. BlackRock's tokenizing $50 billion in assets by 2026. Treasuries drop May 15th. Real estate follows. Apollo's $1.2 billion private credit fund on Avalanche offers 8% yields to pension funds. By 2026, 10% of global GDP trades are on-chain. Miss this, and you miss the whole cycle. Number 3, next up, industry inferno. Mantras collapse and the $100 trillion RWA revolution. April 13th, shattered illusions. Mantra's OHM token collapsed 90% in 27 minutes. $5.5 billion just vaporized. A single treasury wallet dumped $420 million worth during Asia's sleep, liquidating 85% of leveraged longs. The team's 14-hour silence was gasoline on the fire. Lessons? Avoid projects with over 30% team holdings, opaque OTC deals, and weak tokenomics. Sui and Ondo now rule institutional watch lists. But from the ashes, Paris Blockchain Week lit the fuse. Real-world assets, or RWAs, stole the show. Apollo and Avalanche launched a $1.2 billion private credit fund. BlackRock unveiled plans to tokenize $50 billion in assets, and Chainlink bridged Ethereum to TradFi with cross-chain oracles. AI isn't far behind. WorldCoin's bots trade autonomously via Banker, and NVIDIA partnered with Render to decentralize AI workloads. Tokenization isn't a trend. It's a $100 trillion rewrite of finance. Real estate, private credit, luxury goods, all on-chain. Costs slashed by 60%. Liquidity unlocked. Access democratized. Larry Fink put it bluntly, this is the biggest shift since the New York Stock Exchange opened in 1792. 4. Charts and strategy. The setups you can't ignore. The macro cheat code is global M2 money supply. At 95 trillion, it's up 6% year on year. Historically, BTC lags M2 growth by 72 days. Translation, 115,000 by July. Altcoins? The others BTC ratio is at March 2021 lows. Every time this hits, alts explode. 400% in 2021, 220% in 2023. Focus on SWI, where institutions are quietly building. Ondo as BlackRock's rumored RWA play, and Ethereum rejuvenated by lower fees and surging DeFi activity. Whales are buying while retail panics. Institutions swooped 85,000 Bitcoin in March alone as Main Street sold. The 200-week SMA says this bull run peaks late 2025, 6 to 8 months after crossing the 200-week SMA, just like in 2017 and 2021. Number 5, your playbook. Survive and thrive. Step 1, macro defense. May 6th is D-Day. If the Fed cuts rates, go all in. If they hold, buy the fear. Keep a close eye on the dollar index, or DXY. Drop below 98 signals alt season, while a surge above 102 means it's time to bunker down with Bitcoin and gold. Step 2, portfolio warfare. For the bold, allocate 40% to Bitcoin as your anchor, 20% to Ethereum's DeFi engine, and 15% to high conviction alts like SWI and Ondo. Projects reshaping real world finance. Keep 15% in stablecoins, earning yield. The cautious should balance 30% Bitcoin, 15% Ethereum with 20% in yield generating stables, reserving 35% for safety nets like treasury bonds. If you're nervous, limit crypto to 30%. Pairing Bitcoin and Ethereum with 50% in hard assets like gold and short-term treasuries. Step 3, avoid landmines. Stay sharp on token unlocks. Sites like tokenunlocks.app are your early warning system. Dump any project with murky team holdings or low liquidity. This isn't charity, and a weak player won't survive the squeeze. Leverage? Treat it like fire. Useful, but very deadly. Cap it at 3 to 5x or avoid entirely. Sleep matters more than marginal gains. Step 4, hunt for the next 100x. The next giants are already here. Bet on real-world assets with Ondo and Maker. Bridging TradFi and blockchain. AI's collision with crypto births titans like Render, RNDR, powering Hollywood's blockchain-powered graphics, and Ajax's autonomous trading bots. Don't ignore Bitcoin's ecosystem. STX brings smart contracts to BTC, while CKB quietly attracts Asian institutional capital. Step 5, prepare for liftoff. Keep 20% cash ready to pounce if Bitcoin dips below 80K. Tools like TradingView and Dex Screener are your radar. Stay glued. To conclude, this is the Phoenix phase. Chaos isn't the end. It's the forge where new empires are built. Institutions are here. Tokenization is inevitable. The Fed will fold. Your job? Stay ruthless. Cut weak hands, back strong projects, and never lose sight of the horizon. Thanks for tuning in to another Decentralized Masters crypto class. If you found this breakdown helpful, subscribe and hit that like button. Stay sharp, my friends. Stay decentralized, and I'll see you in the next one.